How's it going, guys? This is Forensic Forks with Deontay, and I'm back with another video. This is your daily update on crude oil. As you can see today on Wednesday, price came down and took out that swing low that we talked about that was confirmed. However, we can see price takes out and then runs up and closes high. Now, in my trend formula and how I read daily bias recognition, if a swing low is broken, that can signify bearish momentum. But in order to confirm that bearish momentum, we need to see a lower swing high. Within that same breath of breaking that swing low, we can see price printing a lower swing high as well. One, two, three. While breaking that swing low as well, there's the higher high up here, and there goes the lower high here. So we could have a bearish situation on our hands. Preferably, I like to see the third candle in that lower swing high or any swing point. If it's going to be lower, I want to see the candle low being rated, not the high. We can see already the candle's high has been rated. So it makes me think that this setup here might not be as valid to continue a bearish trend lower. However, we could see this as a sell side raid as well. So I have it as a question mark here. So price comes down and takes out sell side liquidity and it runs up. It even takes out the previous daily low and it also takes out 2 days ago low as well. So Monday's low. So Monday and Tuesday's low get rated and then price continues to run back up, leaving what? Discount. So we can see as well that ideology of buying below the monthly opening price, which is discount or being oversold or undervalued, is ideal for the buyer who is speculating higher prices. Vice versa, for that trader that is speculating lower prices, it's ideal for price to get above the monthly candles open. And for this instance, it's the yearly opening candle because it's January. Selling in a premium is ideal. We can see many selling opportunities that occur in a premium and many buying opportunities that occur in a discount. This market needs to trend though. It is a bit of carnage because it's threading the needle, as we said before, back and forth, back and forth, back and forth. I think the geopolitical tension right now is just a little too much for the market. And sooner or later, it will have to break out of this range. It's just building up buy side orders and sell side orders. It's just accumulating back and forth, back and forth, back and forth, back and forth. And eventually it needs to spill over and pop towards one of the directions. I would like to favor higher. And the reason I say higher is because we can see that the dollar, take this off, put this on. The dollar tends to be correlated with US oil at moments of time. Sometimes they get off whack and they move in opposite directions, but there are times where they get into the same direction. If dollar goes up, oil goes up. If dollar goes down, oil goes down, or vice versa. Oil goes down, dollar goes down. If oil goes up, dollar goes up. And you can see how they align at some points of time, especially in recent years. So dollar has been going up as well. So if we take a brief look at what the DXY has been doing, you can see I mark it off as well. It's not that I'm just tracking US oil. I'm looking at other intermarket analysis as well. I'm looking at UJ, I'm looking at UCAD, I'm looking at U Swissy, I'm looking at EU, GU. I'm looking at all these things at the same time. Just because you see me showing you just US oil does not mean I'm not looking at the other currency pairs or even stocks as well. It's just that I want to maintain the viewers' focus on the channel on day-to-day price action fluctuations and how I like to read it. You can see how swing highs are broken, and we just keep getting higher swing lows. And after every down day, dollar just keeps running up. So from the beginning of the year, you can see dollar has been on a rampant run up. We just got back into that CB here that I have annotated. We also have the IPTA look back data range levels. Got that 20-day look back high. I think this one might be the high here. Yeah. We got that look back IPTA 20-day high here. And I would like to see that ran. You also can see that UJ has been going up. So if dollar's going up, UJ's going up. So UJ is doing the same thing. Breaking the swing high, creating a higher swing low. After all those down days, very supportive bullish price action is unfolding. And if you look at UCAD, it's no different. Right? Price just keeps going up higher. Swing high broken, higher swing lows. If we look down at US Swissy as well, same thing. And if we look inverse, like we look at like New Zealand dollar versus US dollar, you can see the opposite is occurring. So we got swing low broken, wait for lower swing high. Swing low broken plus lower swing high equals bearish trend. And I had wrote this out earlier in the month, right? There goes that lower swing high here. You look to sell after up days. And that was that day I had shared with the chat, selling after up day, and you can see where we would be residing, running those swing lows. So there are moments and times where price does run up and take out swing highs. You can see it here, right there. Look at how it purges that swing high formation here. It's a lower swing high, but it's still on this day it ran back up. On this Friday, it runs right back up, and then it continues to sell off right there. This looks very similar to what U.S. oil had did recent time, right? It takes out previous daily highs and a swing high, and then sells off. U.S. oil takes out a swing low and a previous daily low as well. So this could just be a raid, and price could continue to fluctuate higher. The reason I'm only banking on higher prices is mainly because dollar is so strong and because of that correlation they have amongst each other. Dollar strong, oil strong. Dollar weak, oil weak. And that's how I'm really gauging it right now, currently, regardless of this raid here. We know that there's going to be moments in time when the market does raid sell side liquidity and continues to trend higher. We know that, and vice versa. Like we showed with NU, it ran that swing high and then still continued to run lower. So the bullish trend formula may not be something that fits all methods or all progressions of how the market is laid out, but it's a very cookie cutter like method to get to daily bias quicker than most retail traders or most people in the industry overall. They just don't know how to read daily bias. It's the swing points, and all the swing points make the market. You have to, if this market's going to print a swing high up here, eventually it may target it if it's bullish. Vice versa, if it prints a swing low and it's bearish, it's going to target and it's going to protect the swing highs. And vice versa, if it's going to continue trending higher, it's not going to likely want to run swing lows. We do have occasions like that. Not to say it's not a unicorn situation, in a 1 in a million situation, it happens. We notice that it does happen. Raids do happen. And that's something we all sign up to be at risk for when it comes to trading. Hopefully, this was insightful. I do want to see price continue to push higher. We have that swing high here. So let's mark it off before we leave. We have a swing high here. So we have a lot of things on the charts. We could get rid of this. We could get rid of that. We could get rid of that. We could get rid of that. Just cleaning it up a little bit. We could get rid of this. So I want to see if price is going to still target that high, and if we're going to get this one here as well. I want to see price continue to go up. I don't want to see it to come down. I want it to go up. If price happens to come back down to this previous daily low, odds are I would say, okay, we are bearish. But the fact that we broke this candle's high and this swing high, 1, 2, 3, we already broke the high. I don't really like that. I prefer it to go breaking the low first. If it's going to continue that turning point lower, if it's going to continue this turning point lower, I don't want it to break that candle's high. I want it to break this candle's low. But we've already broke that candle's high. So I'm speculating that price is just reverting back to buy side liquidity. Peace.